All right, so a little bit about the tool that we use to receive these assets, and we'll talk about a couple different tools, but the first one is a donor advised fund. So if you're not familiar with the donor advised fund, you can think of it like a charitable bank account. Waterstone likes to call our donor advised funds giving funds because that is the focus, is being able to give these funds away to charity. I like to think about it as three different thought processes. So there's three different aspects to a donor advised fund. The first is where I live. This is give. This is clients being able to give all kinds of different assets to charity. This is receiving real estate, business interest, oil and gas with all of those tax benefits that we just mentioned. The middle column, the middle process is where Michael Mandarino lives. This is the grow phase. This is being able to invest those proceeds destined for charity and being able to grow them tax-free. So we are happy to open up a separately managed investment account with your financial advisor in order to manage the accounts and create a unique investment strategy for you. We do also have some Waterstone investment pools that you can join as well that are kind of low-cost index funds to be able to be good stewards of these resources. And the granting side of the house is really where we get the joy of giving. We've now created more resources available to give to your preferred charities. So we have an online donor portal. You can log in, recommend grants to your preferred charities now or over time. We can send all of the proceeds out as soon as there's a sale. We can send out funds over the next 5, 10, 15 years. Or we can run it like an endowment. We can send out income generated and create a legacy of giving through these accounts. There are options for anonymous giving. So you can give all of your information to the organizations we're supporting. You can be partially anonymous. You can give them your name, but maybe not your address. You can give them the name of your fund, but maybe not all of your details, or you can choose to be fully anonymous. Waterstone will do due diligence on every organization we support. So we are going to make sure they are a registered 501c3 in good status with the IRS. And we're going to review kind of their mission statement. We're going to make sure nothing is antithetical to our statement of faith. If we have any questions or concerns, we will reach out directly to you to talk about, what are your charitable goals? What are you trying to support? If you have any questions about charities or, need recommendations, we're happy to walk alongside you and help to figure out some of your charitable goals as well. And the best part, again, I'm a CPA. The Donor Advised Fund helps to simplify your tax reporting. So at the end of the year, you get a cumulative annual tax receipt from Waterstone for your charitable deduction for that year, instead of looking for a tax receipt from the 20 different organizations you supported that year. So, instead of looking through your email and your mailbox and getting all kinds of different receipts at different points in time, now you've got one tax receipt. You have really simplified your tax accountant's job when trying to claim your tax deduction.
And Stephanie, one thing on what we use with our clients and our donors is if they're, let's say, tithing to a church or ministry about $10,000 a year, they make $100,000. Typically, they can't get over the standard deductions. So we recommend them opening up a donor advised fund in December and put in the money that they're going to be donating for 2024. But now that deduction happens this year, and that's really kind of the beauty of it. So I just wanted to, I think it's just great. So thank you for that. I just wanted to share a little technique.
Exactly. I like to call that bunching, where you give essentially 2 years worth of charitable giving in one tax year. You get to itemize your deductions 1 year using that large charitable deduction. The next year, you already have all of your resources available for charitable giving, but you've already taken that tax deduction. And so now we can really benefit from that higher standard deduction. We can kind of do that for, every other year or every few years. You can really pre-fund a lot of your charitable giving.